Welcome to another weekly S&P 500 analysis. This week, we're going to take a look at the S&P 500 cash index along with the future and also the ETF. And also we do the likewise for the NASDAQ. In addition to that, as an extra this week, we want to take a look at crude oil future and also gold future. So be sure to stay tuned and watch until the end of this video. Here's what the market is pricing in for the coming week. On the upper ranges, it's pricing in somewhere around 63.36 and 63.42. And for the lower range, it's somewhere between 61.80.80 and 61.40. So as you can see that the market closed with a new all-time high during the week, but it did not close with an all-time closing high on Friday. Neither did it hit an all-time high on Friday. So the market is continue near the all-time high territory. So it's kind of difficult for us to project what are some of the potential resistance level when it is in a new high territory. And one of the techniques that I use, and also many traders use that as well, is use some sort of Fibonacci tool. And here's what I do is I use one of these retracement or symmetry move. So I'm looking at the symmetry move and project it from this low here, and that project up here is a 100% measure move. But then also we have a 127 extension and 141. So this 141 extension is in confluence with the upper range of that 63.30 area. And the other thing is we also have this symmetry move. Right? This right here is projected up here with the 100% measure move. But the 121 or the 127 is in confluence with the upper range of the weekly expected move. So the psychology behind this is we're basically looking at different trader that is trading off of these technical. Right? One set of trader might be looking at this symmetry move and looking at these extension, and then another set of trader, technical trader, looking at this extension and they be looking at these level. So we could see that the confluence, the more of a technical level at a similar vicinity of each other, then the more likely we'll see price reaction at those level. And right now, basically looking at these confluence near the upper range of the weekly expected move. So we could see some price reaction up here at this 63.30 area in the coming week if the price decide to move higher. So those are the key things to look. And if we are pulling back, then look for this pullback into the lower range of the expected move. Now, why are these expected range important? Because a lot of the market maker is a premium seller at these levels, so they're going to defend those levels when the price get near this area, because they want to maximize the premium that they collect during expiration. So they are not going to let the price move away from these range level too much, and when it get away, then they basically have to go hedge the delta position by buying future or selling future, depending on what side that the price decide to go against them. So that's the reason why we watch these upper range and lower range level. So if you find this content to be useful, be sure to smash the thumbs up to give a like to help promote this video. And also be sure to click the subscribe to help support this channel and check out my newsletter at the Pulse of the Market. Now let's go and take a look at the futures and the ETF for the E-mini S&P and also the E-mini NASDAQ 100. And then later on, we'll take a look at the gold and the crude oil future. All right, let's take a look at the ES on this daily chart here. You can see that the ES is pretty much been chopping around inside of this low volume area last week. And also put in a new all-time high. So basically, it's been building value here. Now, if I extend this volume profile, this composite volume profile to fill out the last week's price, you can see that the volume has built up here, and now it seems to be building this big balance area. So basically, the price did not do much at all last week. It finished within the range of the weekly range. So right now, we're going to be looking at this price range for the coming week. The market is pricing in the upper range of between 63.85 and 63.6950. And for the low range, between 62.1850 and 61.75. Now I'm going to lower this to a lower time frame, and also I'm going to remove this composite volume profile. We're going to take a look at this swing here. this price range to see what were the price action and were the acceptance and rejection. I just switch over to 4-hour time frame so you can look at these level a little bit closer. And right now you see that it came down to this high volume zone here and got rejected last Friday and pushes back up to the POC. And also notice that it came up to this low volume area and it got rejected a few times. So right now we are basically looking for the possibility of the price to move higher. And why I'm looking for that is basically it came down here to this value area, this little bit of a value area, and got rejected. So the market is telling us that it want higher prices. Otherwise, it would come down here and chop around, right? Then to try to establish more value here. But right now we see it got rejected and come up to this low volume zone here and sitting at POC. So I would expect the price to continue to auction higher as the buyer, continue to bid the price higher to find more seller. Now, if the buyer could push through this low volume area, that means we basically have the seller exhausted here, and the seller does not consider this area to be fair value anymore. And if we still have buyers looking to buy, then basically they have to push the price, continue to push the bid up, and we could see the all-time high get taken out, and then possibly come up to this upper range of the weekly expected move of 63, 69.50. I'm going to tell you why I expect that we're going to see some seller up here, some aggressive seller, and push this thing back down. Now on the downside, let's say for example it get rejected up here and continue to push back down one more test of this high volume zone, and this time it dip back in and chop around and then breaks it. And if it breaks this high volume zone and come down to this high volume zone, then we have to look for some sort of rejection to go back up. If it is unable to get rejected and move back up and continue to move down, then I'm basically looking for a retracement of this value area and looking at the possibility to come down to this low volume zone area here around 6,200, and that would be into the low volume, the lower range of the weekly expected move between 62.1850 and 61.75. So that would be the downside scenario, is to watch this high volume zone to see what they hold. If they don't, they do not hold, then we're basically looking at this possibility of retracing down to this taper end of this value area down at the 6,200. Now let me tell you why I expect that there could be aggressive seller up here if it moved back up here. So I'm going to switch back to the daily time frame here. All right, now we're back at the daily time frame. The first thing is I'm going to look at this symmetry move here. We basically have this symmetry move and major move, and we're going to take a look at that by using the Fibonacci extension tool. And you can see this 127 is up here near the lower range, the lower edge of the upper range of the weekly expected move. So that is one set of market participant that might be trading, off of this extension or this symmetry move, and they were basically targeting this level, this 127. Then there's the other one that we also have is this symmetry move, and this one is projecting up here at 141 at 6370.75. And again, this is in confluence with the upper range of the weekly expected move. So that's why I'm looking at this level at the upper range somewhere around this 6360 area to find aggressive seller. And we could see, basically resistance up at this area if the price continue to move higher in the coming week. Now let's take a look at this SPY here. Here's the composite volume profile of the swing from this low here all the way up to the present, and including the all-time high from last week. Now notice that there are a couple of these high volume zones. First, starting off with this here at this area here, see how it broke out of this high volume area and came up, and then it came down right here. It got rejected back up. So we know that the market doesn't like this price anymore. They doesn't consider this to be fair value anymore. So as it pushed back up and it came down, from this high volume zone, and here it got rejected. So now the market is telling us that this level is also no longer considered as fair value. And as it pushed up to the all-time high, it came back down, and once again it got close to this high volume area, and the market already have rejected before it got down to this high volume level. So once again, the market is saying these prices up here is still considered to be too low and it's no longer fair value. And as it pushed back up again into this high volume area, so right now it's pretty much sitting right at this high volume area. So what I believe that the market is trying to do is to continue to move the price up. And here's this high volume node here at this 625.70. If it could get above this high volume node, then we're basically looking for another all-time high. And once you push up to a new all-time high, we'll be looking for the SPY to push up at this upper range of the weekly expected move, somewhere around 631.60 and 632. So that is the upside scenario. Unless the price decide to come back down, then we basically are looking at these high volume zone for potential support. And if we could not find support at these zone here, I believe that it's basically will retrace this balance area and come back down to this low volume area here. And essentially this is the value area low of this composite volume profile. And that will be inside of this lower range of the weekly expected move between 615.60 and 611.50. So we'll be looking at somewhere around the 612 area if it come back down. Now let's take a look at NQ here. You see this NQ, it came down to this low volume area multiple times and got rejected. So that means we know that the market considered these prices down here is too low. And seller is unwilling to sell here. So the buyer has to bid it back up. And also notice that when it comes down to this POC of this composite volume profile, we see multiple rejection here from this POC. So again, we notice that buyer are sitting here willing to buy at this POC. So right now, we're basically looking at the possibility of higher prices. Now, it came up and made an all-time high last week. So the first thing that we'd be watching is to see would it be able to make a new all-time high. Then we'd be watching it to push up into this upper range of the weekly expected move between 23,337.50 and 23,289.50. So that would be the upside right now. And it seems like that I would tend to keep an eye on the potential of going long, especially if it break into a new all-time high. Now, there are people say, you don't want to buy into an all-time high. Well, it's all depend on context, right? Right now, it seems like that the buyer is in control. And if we could take out the seller up here at this all-time high, then definitely the buyer will try to get up to here. And we probably will see a bunch of aggressive sellers sitting at this 23,300 area. Now, for example, let's say it came back down and this time it breaks this POC, then we're basically looking at this low volume zone here to see would it be able to hold this low volume zone. So if it's unable to hold this low volume zone, then we're basically going to be looking for a price to retrace back down to, from this value area and come back down to this 22,600, essentially move into the lower range of the weekly expected move between 22,586.50 and 22,425. Now notice there is a high volume node here. So if it break that low volume zone up here at this 22,586 area, then look for that lower edge of this lower range of the weekly expected move around 22,400 area. So that is one of the possibility for the downside move. The key thing is watch this POC. and would it break below this POC or hold above it? If it hold above, then the chances are you're gonna go further higher and make a new all-time high. But if dip below, then we could look for a retracement back down to the composite value area low down here at this 22,600 area. Now let's take a look at the QQQ. We see the QQQ has a high volume node here, and it got rejected from here a few times. So that means there are buyers buying it up, and even though there's seller here, but again it pushes up here at another high volume node, and we found more aggressive seller here to push it back down, where there are still buyers willing to buy it up. So right now I'm basically watching to see would it be a hold above this HVN, and if it does, then look for this to break. If it could break this HVN, then we're looking at an all-time high and possibly push up to the upper range of the weekly expected move between 563.50 and 562.70. Now, again, if it dipped below this HVN, I'd be looking at this POC here. This POC somewhere near this 550 to see would it be able to stay above this POC and try to build value here and then eventually make another push up. But if it's unable to do that, then we're basically looking for this to retrace back down into this value area, low area, and this low volume zone beneath the lower range of the expected move, and or inside of the lower range of the expected move here between 545.70 and 541.50. So those are the possibility on the downside here. And the key thing to watch right now is basically this node here at 552.37. If it stay above the 552.37, then we look for a higher level. But if it's below that, then the next key level is the POC at 550. And if below 550, then we could see it all the way down to this 544 and even down here to possibly at this 542. All right, let's start with the weekly chart on gold here. As you can see, gold has been on a multi-year bull market here, on this multi-year rise, and right now it appears that it is trending on this particular trend line here I have, and it's been ranging between this 32.35 and 34.69.30 with a high volume node somewhere near the 33.46.40. So if we switch over to the 24-hour time frame here, and looking at the 24-hour time frame, we could see that it's been hovering around this balance area for quite a while now, since April. And it did come down to this low volume area and got a nice bounce up, but it seems to be, bouncing more off at this 32.91 area. And right now it is sitting right above this high volume node. And I do have a trade on gold here. I do have a long, so just for disclosure. And right now I'm basically looking for the price to come up to this 34.40. and see would it break this and possibly come up to this 34.69 area and basically get back to this previous high here. And if we take a closer look at the 4-hour time frame, what I'm basically watching is, as long as it holds above this high volume node, then I'm looking for this thing to auction up to this taper, up here into this low volume zone here. Now if it break this high volume node, then I'd be looking for the possibility of it come back down to this 32.90 area in this low volume zone here. Then then look for another run at it to see would it come back up. So right now I basically got a trade on, and it's already paid for, and the worst outcome is going to break even for me, so, or a scratch trade. So I'm basically just holding on to see would it be able to continue to run up and see how high could it run up to. I'm looking for this 34.40.80 area. Okay, let's take a look at crude oil. Crude oil actually just opened in the Asian market. So right now it's up just a little bit, but it shouldn't matter any much different to what we are looking at. And here you see on the weekly chart, crude oil been in this range between somewhere close to 54 and 77 for the last 3 years or so. So basically sitting right here at this high volume node, just slightly above that. Let's go and switch over to a lower time frame here. And here we're looking at the 24-hour time frame, and see that it is sort of coming up on this trend line here. Notice that recently it came down to this HVN and bounces back up, back tested, and also got rejected and bounced back up. So basically I'm looking for the possibility of continue to move higher as long as it stay above this HVN. And I'll be looking at the first level of resistance. Potential resistance is somewhere around the 71 area. And if we could break about the 71, then I'm looking at the 77.13. And if we look at the 4-hour time frame, you could see that I have a couple of these low volume zone here. See, basically I'm looking at if it break above and come back to a back test, I'd be looking for long setup to play it up here to get this 71 and then possibly trail it up to this 77. But if it decide to dip below, then if it come down here on this zone, then I'll be watching for possible setup to play it long to come back up here and try to break this once again and do this, playing up to the 77.13. Basically, I'm long bias on the oil right now. I'm just looking for potential setup to set up a swing long. But if it dip below this low volume zone and get down to this HVN here, this POC, this composite POC, and if it get below that, then I'll be reassessing that, and it could start retracing back down to that 54 area to the lower multi-year range. So that's basically a crude oil. Thank you for watching. If you like the content, be sure to give it a thumbs up. And if you are new to this channel, click the subscribe icon to subscribe and help support this channel. Now, for more content from me, go visit my newsletter at smtraderCA.substack.com. You will find trade ideas, daily trade plans, weekly market review and analysis, trading tutorial and strategies, and much more in my newsletter, The Pulse of the Market. And the link is smtraderCA.substack.com.